If you had to guess who controls the American mortgage market, you'd probably name one of the big household name banks, right? Well, the real answer might surprise you. So let's dive in and figure out who the new power players are when it comes to homeownership. Let's just put the question right out there. When you decide to buy a home and you get that loan, who is actually writing it? Because the name on the building might be familiar, but the engine behind the entire mortgage industry? Yeah, that has completely changed. And here it is. This one number tells the whole story. Last year, a staggering 84.1% of all single-family mortgages in the U.S. were originated not by those big banks, but by someone else entirely. So, who are they? Well, it turns out the market is now run by a group called IMBs. So we're going to break down what exactly an IMB is and, more importantly, how in the world they pulled off this incredible takeover. Okay, so an IMB, or Independent Mortgage Bank, is a non-bank company that is just laser-focused. Seriously, they don't have checking accounts, they're not going to give you a credit card. Their entire reason for being is home loans. And you know what? That specialization became their superpower. After the 2008 financial crisis, new rules made mortgage lending kind of a headache for traditional banks. That created a huge opening for these leaner, more focused companies to jump in and, well, completely take over. And you can really see the scale of their growth right here. Just look at FHA loans. Back in 2010, IMBs were handling a little over half of them. Fast forward to 2025, and it's projected they'll be handling a whopping 90%. That is a massive shift in a really short amount of time. And here's why that matters so much. This isn't just some financial footnote on a spreadsheet. This directly hits people who are trying to get their foot on the property ladder. With 83% of these FHA loans going to first-time homebuyers, IMBs have basically become the main gatekeepers for a whole new generation of homeowners. And this just shows you their dominance in the wider financial system. See, Ginnie Mae's securities are these big bundles of government-backed loans. In 2010, IMBs were barely a blip on the radar, just 12%. Today, they issue almost 95% of them. They haven't just entered the market. At this point, they are the market. And their reach doesn't stop there. They are also the #1 lender for our nation's veterans, originating over 95% of all VA loans. So from first-time buyers to military families, IMBs are the ones making it happen. But here's the catch. These new kings are ruling over a very challenging kingdom. So let's take a look at the tough market conditions that both they and anyone trying to buy a home are up against right now. So what does this tough reality look like? Well, for buyers, you know it, a huge affordability crisis. Home prices that just won't come down. And that's pushing the average age of a first-time home buyer higher and higher. And for the IMBs, well, that laser focus we talked about is kind of a double-edged sword. The massive refinancing boom is over, fewer people are buying homes, and now a lot of these companies are merging and consolidating just to stay afloat. There is, however, a little bit of good news. While rates are still high, they have thankfully pulled back from that recent peak of over 7%. That drop to around 6% has given everyone, buyers and the industry, just a little bit of much-needed breathing room. So whenever you have a shift this dramatic in a market this important, you can bet Washington starts paying close attention. Let's explore how policymakers are starting to react to this new landscape that's now completely run by IMBs. And the industry itself is not being shy. This quote from Taylor Stork, the president of the Community Home Lenders of America, is basically a direct message to lawmakers. They're saying, hey, look at our data. You need to understand who's running the show now before you make any big decisions. And there's a lot in motion right now. On the consumer side of things, Congress just passed a law to limit those super annoying trigger leads, the ones that flood you with calls the second you apply for a loan. But on a bigger scale, lawmakers are debating new housing acts, and different agencies are trying to streamline regulations. And then you have the really big questions. The future of Fannie Mae and Freddie Mac is up for debate again. And all of this is happening while AI is starting to completely change how loans get made in the first place. Okay, so they're the new kings of the hill, and Washington is buzzing with activity. So what do the IMBs actually want? What's their agenda for the future of American housing? Their policy wish list is pretty clear. First up, they want to finally end the government's long conservatorship of Fannie Mae and Freddie Mac. Second, they want to get rid of certain pricing adjustments that can make entry-level homes more expensive. They're also pushing to ditch those lifelong mortgage insurance premiums on FHA loans. And finally, they want to shake up the compensation rules for the people who actually write the loans. So here's the bottom line.
The people who finance the American dream, they've completely changed. A specialized, non-bank industry is now calling the shots. And as they push their agenda in Washington, it leaves all of us with a pretty big question to think about. What does this new reality mean for the future of your home?